Hello and welcome to myfinanceteacher.org. We invest in precious metals, energy, general stock market, and Bitcoin. Follow us on YouTube, subscribe to the channel if you haven't. And in this video, I want to talk about crude oil. The reason I want to talk about it is because I think there is a relatively nice low risk setup on crude oil going on at the moment. Let me talk about that. So what I think is happening on crude oil is we have probably finished a daily cycle low, the first one in the ongoing intermediate cycle in crude oil. This daily cycle, it seems that it has lasted since early June. It topped near the middle of July, and we have potentially seen our daily cycle low on the 18th of July. Although there is still some risk that the decline within this daily cycle in crude oil continues and we will see a lower low compared to what we saw on the 18th of July, I think the risk of a long trade over here is relatively low, and given the nice possible reward to risk ratio, it might be a good idea to take a stab at energy and specifically at crude oil. Me specifically, yes, I do have some positions in USO. I hold this position for trading the ongoing intermediate cycle, so I'm not going to hold USO in the long term. I'm going to sell it when the current intermediate cycle tops. Besides that, I do have some positions in oil producing companies, which I hold over the long term because they give me a nice dividend yield. Next, let me talk about why I think the ratio of potential reward to risk at the moment in crude oil is very attractive. First, talking about the daily cycle itself, if we have already seen the low, then the cycle lasts between this double bottom in early June until this low on the 18th of July. That gives us, let me start counting from somewhere in the middle of that double bottom, that gives us around 41 days. Actually, it's a little bit on the short side for a daily cycle in crude oil. So there is still risk that we are going to continue the declining phase of the current ongoing daily cycle, and it's going to stretch for another couple of weeks with a lower low compared to the 18th of July. However, current price is only $56.2 per barrel, whereas the low on the 18th of July is at about $54.75. The distance between these two numbers is relatively small, and that is what gives us a relatively low risk setup. You could set a stop loss order somewhere around that low, let's say at 54.75, and if that low is broken over the next several trading days, then your loss is only going to be around 2.5%. Of course, nobody wants to take losses, but any investment does have some level of risk. On the other hand, there is a reward potential if the daily cycle has finished a few days ago and we're going to continue the advancing phase of the longer intermediate cycle. We are very likely to break above the highs of middle of July. And even if, let's say, we don't break above the highs that we saw in the end of April, if we only retest those highs and then enter the declining phase in the intermediate cycle, that would still give us 17% upside compared to around 2.5% risk on the downside. So what I'm personally going to do when the US markets open, that will probably happen in another several hours, I might add a little bit to my USO position. But remember, if you do so, and this is not an investment advice, in these videos I just share with you my opinion and my actions in my personal trading. Anyway, if you are interested in a long position in crude oil, remember to put a stop loss at about $54.75, because if that low is broken, then we are still in the declining phase of the ongoing short-term daily cycle. Now let's change the chart a little bit. I've removed the 50-day moving average and put the Bollinger Bands on the chart. We see that on the 18th of July, we crashed a little bit through that Bollinger Band. And a retest of the lower range of the Bollinger Band or a slight crash below that Bollinger Band might be an indication of a daily cycle low in this situation. Some of you might refer me to what happened in crude oil in May. There were several situations when the price crashed below the lower level of the Bollinger Bands and still continued to decline for nearly a whole month. However, remember that happened in the declining phase of an intermediate cycle. We are currently in the advancing phase of an intermediate cycle, and if we compare apples to apples, if we see what happens all the way in January, February, and March this year, we see that a daily cycle low was somewhere around middle of February, actually on the 11th of February, when crude oil price just retested the lower end of the Bollinger Bands in an advancing phase of the intermediate cycle. After that, we saw a nice rise in crude oil price from around $51 all the way up to $66 and even slightly higher than that. Even the second daily cycle low still followed a similar pattern. We saw a slight break below the lower Bollinger Bands, followed by a modest rise already because we were entering into the declining phase of that intermediate cycle. Same thing on the 14-day RSI. It did not reach overbought levels a few days ago, but it might be low enough for an advancing phase of an intermediate cycle. Same thing we saw in early February this year. However, still we should not forget about caution because after all the current daily cycle has only been going on for around 41 days. That's a little too short for a daily cycle, so it might still continue with this declining phase for another couple of weeks possibly. So don't lose your head, remember to place stop loss orders. That is all for now. Subscribe to the channel, hit that bell notification. Have a nice day and good luck in your trades.